Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Tuesday, May 14, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? Well, Mrs. Market continues on an upward grind / melt up operation, and today reaching the next resistance zone that we had identified inside the numbers and in the live room. It is both a target and a resistance zone. We'll get to that in a few moments. Let's pan back a little bit and figure out where we are from a big picture perspective. We're not that far from the all-time highs. The all-time high is 524.61. Almost achieved today, likely will be achieved tomorrow with the phony CPI data number. We had the PPI this morning. They dropped them right out of the gate, but there was a quick rescue operation. What I described to the live room members this morning is after the PPI data release, it was like the market was one of those blow-up balls that you push under the water. When you let go, they pop right back up. That's what happened with the market. Good news is good news. Bad news is good news. Any news is good news. Doesn't make any difference. They're headed to a destination. Where's that destination? Is it the all-time high? Is it higher than the all-time high? Is it that trend line above that comes in right around 532, 532 and a half, 533, up in that neck of the woods? Well, just so happens I have a number above the all-time high and below that trend line that is A, important, B, is a target if they get above the all-time high, and C, should represent overhead resistance. Inside the numbers and live room members will certainly be privy to that number tomorrow. It will represent an intraday opportunity, whether it's a target riding it up there or for a reaction once price gets there back down in the other direction. Just to reiterate, it's above the all-time high, below the trend line. It's not that far away. We'll reserve it for live room and inside the number members. Speaking of live room members, this was a trade that happened in real time. One of the members noticed VSR was on the move, quickly identified the support zone in VSR. 274.75 was the number. They hit it. They played with it for a little while, and they had a nice rocket ride away from 274.75 in VSR. Real-time live day trading room. We'll wrap up the spiders in terms of above all the moving averages, trend is your friend, near the all-time highs. She's bullish. It was quite the recovery from down here around 500. In about 8 or 9 trading days, she's gone up over 230 S&P handles. How you doing? Swing trades are doing fine, by the way. We have a long list of long side trades. We have some short trades. Even the short trades aren't really out of the money by that much, down a couple of percentage points. Longs are running, shorts are holding steady. The market will turn, the thing will flip. That's the design of the automagical algo system, lazy swing trader. What do we have from an inside the number perspective today? What was on the board at 0 dark 30? What numbers were we looking at early this morning? Now keep in mind this is at 0 dark 30. Let's call it 6:30, quarter to 7 a.m. Eastern Standard Time. We're waiting on the 8:30 a.m. data release for the PPI. Sometimes they move them, other times it's a dud. We'll see, but we need the numbers. So we have the numbers. First, we have a bull pivot, 521.70. What does that mean? That means the market turns bullish once F price can sustain above 521.70. Bull pivot. You could see here on the chart, they tried to fight it. Remember, right of the vertical is today's activity. 521.70 is your horizontal trend line. They tried to fight it early this morning. Tried to pop up, drop below, tried it again, drop below. Finally, this afternoon, when nobody's looking and everybody's out doing something different, that's when they run them into the closing bell. A la end of day jam session. Once they were to get above that bull pivot on candle closes, stay above, that opens the door for yesterday's high, the resistance zone, which is unfinished business, which is at 522.75 to 523.50. What you'll see later in the notes is 522.75 was a target, and now what you'll see is the 523.50 was in fact overhead resistance. Now watch this. I want to show you something a little bit different. If they drop them, we have a nearby support zone, 519.25 and 518.10. Below 518.10 is where things can begin to get woolly. Let's look at some evidence of that. See this down here all the way at the bottom, 518.10. Let's flip over to the chart to the extended hours, and you can see here right after the 8:30 a.m. economic data release, the phony PPI number, they made a low just short of that number, 518.18, never looked back. That number was important. That's where things would have got woolly if they started getting below. Couple of stocks on the move today. We had BABA and Mara. Mara didn't hit its entry objective, but BABA did, so we'll take a look at that chart. Here's the way BABA laid out. So here's a 5-minute chart. They're getting a buzz cut at the opening bell. They open below the first number, so what happens? Well, first number disappears. Doesn't exist. It's off the board. The next number down is the first number after that happens. So we're watching 78.81. They pull up a couple of pennies short. The low in this candle was 78.85, 4 cents, and they have a little bit of a ride away from it, providing the trade without spiking or even touching the number. So technically speaking, this number's off the board because you're not going to take it the second time down. First time, best time, they came up short. They did the deal, therefore we don't want it. So what happens? Technically, this number's off the board. This is what was going on concept-wise in the live room. We were watching BABA. We had a lot of traders take BABA down at 78.22, a little spike of it. And what did they do? They got paid accordingly. This was the only number that was active on the board at the time price came into it based on the prior activity. First number opened below, off the board. Second number came up short, did the deal, off the board. Third number did the deal. How do you like dem apples? Eliminate the variable risk, which I talk about every single day in the live room, and your results will skyrocket. What's going on over in Camp IWM? Well, this one was pretty good / bullish out of the gate today. Relative strength all day long. Finished up about 1%. Again, relative strength against the S&P, against the other indices. This is my favorite market-leading index. Doesn't look like much on this chart, rather narrow-ranging day. Still, nonetheless, finished up 1%. Yesterday's close down here. Today's open and close roughly in the same spot. What's the target / prize on a rising or continued rising market for Camp IWM? About 210. Maybe it's 210.05, 210.10, something just above with a spike of 210. Write that down, put it on a sticky note. Above all the moving averages, trend is, and we'll say it all together, your friend. What about the folks down at the transportation department? They're going the other direction, down 0.4% today. Non-participant on the upside. Not only is it my second favorite market leading indicator, but a number one canary in the coal mine. Are the transports trying to tell us something, or is it just a one-day wonder diverging from the other markets? Tomorrow will tell more divergence, more evidence. One-day wonder, we just brush it under the rug. On-time situation, we talked about it yesterday. Today is an on-time situation for team transports. Funny how that works. They did not participate in the upside during an on-time type of situation. What about the Q people? Above all the moving averages, trend is your friend, approaching all-time highs. Same routine as the spiders. Likely a push above the all-time high. And by the way, the CPI data release at 8:30 a.m. Eastern time tomorrow morning is the perfect recipe for them to bust through to the all-time high and higher. Now, can they do the opposite? Can they make everybody think that's happening, pull the rug out, go down? Anything's possible. We'll let the market do its thing early in the morning, and we will be able to trade from an intraday perspective the reaction from that data release. We'll be able to trade if they're rising, if they're falling, based on numbers they reach. Are they going to have a reaction at numbers? That's where our bread is buttered. All in all, nothing really more to discuss in the Qs. We're just belaboring the thing. XLF up a little bit today, above all the moving averages. Trend is your friend. We talked about this a long time ago. This is a bullish pullback pattern. They got back above the moving averages, and here they are trending right back to the highs. No accidents, no coincidences, no surprises. S&P's at the highs. Qs are at the highs. XLF is at the highs, near the highs. When there's nothing wrong with the financials, there's nothing wrong with the structure of the overall market. Where have you heard that before? About Smashmouth, relative strength. Smashmouth is a pretty good indicator / proxy for the tech space as a whole. Up almost $4 today, 1.7%. Above all the moving averages, trend is your friend. Look what they're doing. So we can identify this as a breakdown box. Why is that? Because the market traded sideways for a while, finally broke down. Now they've come back to run a test within that breakup box. Getting to the high of the box isn't necessarily a bearish thing. They're just pushing to the high of the box. And if they stay there and they don't get rejected, what are they doing? They're opening the door once again for another test of the all-time high and or higher. We're watching the breakdown box. Got some questions rolling in on crude oil. What's going on crude? Well, here's a daily chart, and we're talking about boxes. We'll talk about a breakdown box. We'll talk about a bearish flaggish situation. You could put it in a box in this range until they break the chain, meaning get up into and above these moving averages. This last breakdown candle high in the line of defense around 81.5. This is bearish, building energy for another move lower. That's crude oil. What about gold? Pullback within an uptrend. 20-period moving average, they gave it up. They recaptured it. They're eating time off the clock. You want to clear up some of the noise, go to the weekly chart. So you had a big run up. Then you had a pullback for a couple of weeks. And now you're trying to run back up, or at least making an attempt to go back up. Not necessarily yet to the high, but not that far from the highs to begin with. This is bullish. It's in an uptrend. It's a strong chart. There will be corrections along the way. Pullbacks are meant to be bought. Gold is bullish. I've said this for years. I stand by that. Continue bullish for years. Now we'll talk about something we don't really talk about much, but I'm going to give a little synopsis. This is the XLRE, which is the Real Estate Select Spider Fund. There's other real estate funds out there, exchange-traded funds, other kind of funds. I just picked this one to use the chart as an example. When you look at this against the S&P, for example, let's go back to the S&P for a second. Near the all-time highs, IWM, not near the all-time highs, not even close, telling you long-term there's something different here than the S&P, the Qs, all that stuff. Transports, not at the all-time highs, not that far above all the moving averages, monthly chart. Trend is your friend. Still not near the all-time highs. Canary in the coal mine-ish. Stay with me. There's a method to the madness. Qs, lopsided to the Fab 7, if you will. Money flows in there. Everybody owns those stocks. Google, Netflix, Nvidia, Tesla. Even though Tesla's been a dog this year, people buy tech. Tech pushes the market up. People push tech up, whatever it is. Basically, we'll just call it all-time highs. Now you go back to the real estate fund for a second and you say, well, wait a minute. Look at this monthly chart. It's going in the other direction. It's got lower highs. It's not even close. It's been going the other way. It's not above moving averages. There's something going on here. Should we know about it? Well, this has to do with, and we've talked about this many times, the bond market, interest rates, real estate, debt, rolling over of debt, increased cost of rolling over on debt. Real quick, let's say you own a building. You financed the building when rates were basically zero. You got the building almost at a zero cost of carrying the money, relatively speaking. It's not zero, but we'll go with it for this example. Low interest rates. Now, you always have to, in the real estate world, roll over your debt. They're not giving out 30-year loans on these commercial buildings, apartment complexes, all that stuff. They have balloon payments, you roll over the debt, and everybody thinks when they do these deals that they'll just roll over the debt, and they never really consider interest rates will rise. Interest rates start to rise, the bank wants a new loan. They have to have a balloon payment. You need to roll over the debt. What happens? The cost of money goes up. The value of the real estate, a la the real estate spider fund coming down, the value of the property goes down. You can't borrow as much as you could before based on a higher valuation. Cost of money is higher. Sounds like a recipe for disaster. Sounds like a recipe to drop the keys in some cases off in the bank's lockbox to the building. Now let them deal with it. And that's pretty much what happens in these cycles. Oversimplified example, but that's the reason you see the XLRE and others like it not participating in the rally. What this is telling you is look out into the future. This is going to be an issue. It could certainly be a catalyst that has trouble for the market later on. We've seen this before. However, it's not an issue today. It won't be an issue till when? Until it's an issue. If I told you how much I appreciate each and every one of you, without you, these videos, they're not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.